Hey everyone, we're looking at the Dow Jones on the daily here, and we saw a pretty good move to the downside today, down about 1%, hit the 18,000 level. We talked about that coming into this range, and pretty much on Sunday's video, we talked about the weakness of the market, and if unless it was going to break past this 18,350, I'm pretty negative on the market, and I think it makes sense based upon where we're at. If you look at this on the this is a longer term chart I had working on this. You could see this channel formation, and this channel starts all the way back till May, from May 2012, and you could see how accurate this really is as you move through the range. You really hit all the major ranges here. But what I think is very interesting here, not only does it really play well off of this, but you could start to see as it's starting to kind of hit the midpoint, the midline, you could see all the action in there and it holding this. So it really gives a lot of credibility to the trend line and the regression channel. And you could see also as it starts to kind of not really be able to get over the midline on the regression channel, and prices start to run sideways from, really where we've been saying for some time that we felt in January we really see a very tough year. You see it break the channel line here, but kind of recover a little bit. Not kind of like what we saw with this quick corrective action and we knew should kind of come back because it was just way overextended. We saw a slight incidental break, and now we're starting to see it come back into the line, testing this bottom line several times. In reality, when we look at it, we only see them really tested once here, and that to me really says a lot. I think we're starting to see a very overextended marketplace. So when you kind of look at it on the long term there, I think it really gives you a good idea where you're at. We've also talked about the fact that that prices are little, hit our target range, not only in time but price. We talked about the fact that as we see this as far as an extension, we felt that that may be a little bit difficult for it to do. We also said that as it tried to break through this range, this could be a very, very bullish move, and it needed to prove it. And, it's normal that it pulls back a little bit, but it has to get strong again to make that break to the upside if it was going to see any real momentum change. We also talked about the divergence that we were seeing here, and now we're seeing that happen again. So in reality, we're seeing prices starting to really have a very tough time. This is why I was a little bit, I think when you see this and then you see my strategy with gold and silver, I think it made sense because I thought, we may see kind of the run into that range, but we really saw the dollar move higher here. I think that, was really been impacting. But overall, we're seeing the market start to weaken here. And I do think if it can break past this 17,900 range, I think we'd see a big move come down back into 17,000 and possibly back down to the 16,000. This could be a very, very positive trade for those playing, options, or at least keep that in mind. And anything past that 360 range, I think would be, you'd start to get a bullish tone here. But keep in mind, you're at the midpoint. You may see this try to recover a little bit. Instead, it's near the 50-day moving average at the midline here of this other regression channel, and very close to the end point on this longer term channel. But keep in mind, I think we're seeing a deteriorating action of the overall market. So it would not surprise me if we saw a longer term correction that would start to step into the marketplace, bringing it back into some more realistic ranges, back into, say, the 14,000 range, and maybe even the 13,350 level. So we could be seeing about a 5,000 point move to the downside on the overall market.